I think you've become quite an influencer yourself. Yeah?
I'm a journalist.
Influencer, not an influencer.
Influencer.
It's a Finfluencer.
After the big money began flowing in, there is no filter in what they will promote. When crypto was in fashion, they were big on crypto.
Yeah.
There was that whole Vault episode where they were promoting Vault like an FD.
The viewers don't understand how this influencer is exactly earning.
In case things go south, right? Your 100 will become 0. So that risk reward is absolutely not worth it.
Yeah.
I think 20 years ago, like 90s, early 2000s, it was like the Wild West. You could do whatever you want. From there, SEBI has done a good job. A lot of regulations are coming in place. India is now seen as a leader in terms of the regulations. Are we now getting into an area of over-regulation?
There are banks and then there are mutual funds owned by banks. Bank RMs will recommend schemes of their own sister mutual fund. Although they are supposed to be unbiased. All distributors are supposed to be unbiased. Thankfully, all this is disclosed.
Welcome to the second episode of the BlueFort Blueprint. Today we have a very special guest with us, Mr. Neil Borate. He is the deputy editor at Mint, one of India's leading media business houses, and he also heads the personal finance team over there. He recently authored a book called The Big Bull of Dalal Street, which is of course the story of Mr. Rakesh Jhunjhunwala. Personally at BlueFort, we're big fans of him, and I personally think that the quality of his content on finance is unmatched. Thank you so much, Neil, for coming on the podcast. We really appreciate it. Thank you for your time.
Thank you for inviting me. And you got my surname right. Everybody else is like Borate, but Borate. Yes.
No, I think we've done a few podcasts before, so now we know how to say it. Yeah. So how have you been?
Great. 2 cups of coffee and I'm always good.
Okay, great. So speaking of, I think you've become quite an influencer yourself. Yeah, recently
don't use that word for me. I'm a
It's
journalist.
Finfluencer, not an influencer.
Influencer.
It's a Finfluencer.
No, but every morning I'll tell you, whenever the first thing we discuss in the morning, a lot of times in office is that Neil ka naya post dekha kya aaj subah.
Thank you.
So, and the level of engagement that you've been getting on your posts, we've been following you for the last 6-7 months now, 8 months. It's been a long time. It's the engagement has just increased. Yeah, there's a lot of value addition that you're doing for a lot of people.
Thank you. So the way I see it is that we cover a lot of topics that a lot of mainstream media is not covering.
Yeah.
Usually the discussion is just which sector is good, which stock is good. We think more about people's lives, like what do they do after retirement, where do they live, where do they socialize. So all of that comes into our area.
I think, and more than finance, what you do is you talk about general stuff as well, in terms of how what restaurants, what are they priced, how are they priced, about clubs and everything in general, right? So it's not only about finance, but you can kind of relate. People can kind of relate to the content that you guys share, which is commendable.
It is as simple as we did a story on should you buy a car or use Uber Ola, and that
Correct.
got so much both positive and negative engagement. I mean, people got passionate about it.
So what was should you buy a car or should you?
So, okay, most people were like, Uber Ola does not come on time.
Correct.
Our analysis showed that it depends on how much you drive.
Right.
I don't remember the exact amount, but above a certain threshold of kilometers, it makes sense to get a car because
Correct.
kilometer cost is lower.
Right.
But what we didn't consider, and people put it in the comments, is things like drivers cancelling, or if you have somebody at home who is very sick, was an emergency, and the Uber driver cancels, then that really
The
hurts.
car makes
The
much
softer
more
issues,
sense.
basically,
The
the
softer-
non-financial issues.
Yeah.
I think what also you've done extremely well is that you've gone beyond the traditional media format where you're publishing on your own website, but you've gotten a lot of engagement on LinkedIn, Twitter and the like, and I think people actually read your articles more over there rather than on the Mint website.
They do. Although what I really hope is that this old tradition of getting the physical paper at home, it should not die. It's unfortunately dying, but it was good for the eyes. And also what happens when you get your traditional paper at home is you're not being, there's no algorithm trying to manipulate you, saying that
Exactly.
Yeah.
right. So I hope that makes a comeback.
And at least you, as a viewer, right, on social media, if you compare it with a traditional paper, at least you don't look at the dirty comments or some influencing comments, right?
Yeah.
I mean, coming to that, let's talk about
Influencing.
Which I am not. For
you're
Whether
getting
you
there.
like-
Honestly,
whether
you're
you
getting
like
there.
it or not, you're
No,
getting
but one
there.
thing, honestly, 6 months ago, I think 6-8 months ago when we first met you, I think at the office itself, right? And from then to here, it's been, tremendous growth, which in terms of your following as well, and in terms of how you've kind of come up in the social media ranks too, right?
Thank you.
And which is why we again call you what we do, the Finfluencer. the correct Finfluencer is the right word, right?
Thank you.
Yeah.
Yes.
Influencer can be a good thing also.
Can
Yeah,
be.
it's exactly,
it's
that's
not-
the
it's not
point,
always
right? It
negative.
shouldn't be a bad thing.
No, but lately we've actually become quite obsessed with those this whole finance influencer thing. I think
Yes.
they really erupted during COVID. उससे पहले तो कुछ इतना concept ही नहीं था. Influencers they were for other things. Maybe fashion or like
Correct.
makeup or this and that. Suddenly finance makes an influencing sort of thing, right? And generally we wanted to understand from you, because you probably monitor them a lot more closely than we do. We obviously have our opinions, but we wanted to understand what kind of impact do you think they're creating on society. I think that generally they do more good than bad, because generally, especially when they start off,
Yeah.
later, as they start making money, it's a little questionable what they start doing.
Yeah,
But
yeah.
when they start off, they are genuinely putting good information out there in a way where people can consume, in tiny sort of short forms that a lot of other media houses are not able to do.
Yeah.
And I do think that they deserve a lot of the success that they're getting. So what, in terms of how they're impacting society, what do you think has been their journey?
Yeah. So you're absolutely right. They have brought a lot of people into the market who initially were not engaged, were not interested in investing at all. So to that extent, great. They've got people started on that journey. And through platforms like Instagram, like, who would have thought you can dance and talk about finance, but
Exactly.
people do. But you're right. What has happened is, with a lot of them, after the big money began flowing in, there is no filter in what they will promote, what they will advertise. Right? When crypto was in fashion, they were big on crypto.
Yeah.
There was that whole Vault episode where they were promoting Vault like an FD, and people invested.
Exactly. That's the worst thing. Yeah. I mean, misleading, to be honest, misleading investors is the worst thing you can do as a finance professional, or what you call yourself as an influencer, right? Getting money from someone to promote something is still fine.
Yeah.
But just using that money to kind of mislead people to do whatever they want by, speaking rubbish. I mean, it's rubbish. Yeah. Vault as an FD is stupid.
I think they simply just don't care, right? For them, their currency is clicks. They want views, and whatever will get them views, they'll do it.
Correct.
And because whatever views they get on this video increases their potential earnings from the next video. That's all that matters, right, for them. So there's no accountability in that sense.
Yeah, I mean, now we see them moving towards fitness and diet. So whatever works, let's go and do on that.
I think, in my personal opinion, is that if the followers know where they're earning from, right, then this is my opinion, then it's not necessarily unethical per se. Like, let's say, because that's like saying that obesity is caused by McDonald's, but what my problem is, when the viewers don't understand how this influencer is exactly earning, those affiliate links. That in my opinion is a big problem, especially if you click, like if you see a lot of these big influencers, Zerodha ka ek link hota hai, and they click. Now the guy doesn't know that this guy's gonna get lifetime revenue when he trades, every time this guy trades, right?
Yeah.
So his content, now he's influenced to sort of put out content which will encourage this guy to keep trading on and off, as for as long as possible, and he has no idea that this is happening. So I'm not okay with that. I think that is a problem.
Correct. Problem is, we have to understand how do brokers make money, right?
Yeah.
Brokers make money from F&O. If you're a discount broker, delivery trades are free.
Correct.
And futures and options are inherently loss making for investors. I mean, there's a SEBI study out there which says 9 out of 10, people don't make money. So there is every incentive for a broker to get the customer to trade F&O, and the influencer economy and the affiliate links feed into that. Just keep them trading, keep them generating commissions.
Correct.
If they make losses or not, who cares? That is
I think we're also using Finfluencer as an umbrella term, but there are different types, right? So there is the type that know what they're doing is wrong. They're doing pump and dump schemes, like the one that Arshad Warsi's name came up in. They knew that this is pure market manipulation. They wanted to increase the stock price and get out of it, and that's that. There are others that are more subtle, like Vault. They're not manipulating the market, so to say, but what they're doing is morally a gray area. And there are others where it's even more subtle, as you said. They don't even know, like the audience doesn't know where they're making their money.
Yeah.
So there's a whole spectrum out there, and I guess that's where regulations need to come in. So how do you think that can be regulated?
Absolutely. So there is this SEBI advertisement code which applies to RIAs, registered investment advisors, and RAs, registered research analysts, which is so stringent. Practically anything you say is considered as marketing under that code. But somehow when it comes to brokers and these links, none of that seems to apply.
They're out of it.
Yeah.
No, in fact, honestly, I've been a Zerodha user since the last 6 years, and if someone tells me that this particular guy is earning from you every time you trade, right? That's a betrayal kind of a thing, to be very honest, right?
Yeah.
Especially not only Zerodha, but most of these firms who have been coming up, like the platforms, right, which we keep hearing, these ads which come up, right? We think that, okay, fine, they're doing well, they have so many subscribers, they have so many demat accounts doing well, and it's this growth story of India kind of a thing. But if you come to think of it, it's just a few finfluencers who are just kind of manipulating retail individuals who just probably don't know. Like, I'm on Twitter, active on Twitter, right? Now I see a comment or I see some video, I'm gonna like it, right? And to be honest, I'm in the field, so I know what's right and what's wrong. But I'm sure there are millions and millions of people out there who don't know, and they just follow this guy and be like, okay, cool, let me try this.
There's one other way in which they make money, which we should talk about. And that is these educational courses.
Correct.
Right?
Oh my god.
500 rupees, 1000 rupees, I'll teach you to trade, I'll teach you how to make
I'll make you Rakesh Jhunjhunwala.
You've seen those seminars, right?
Yeah,
Regarding
yeah.
option trading. Oh my god. So a rented car, which is probably a Range or Merc or something, and 3 cars, not even one, for one guy. Okay, and there are bodyguards and all that. They book lavish 5-star hotels.
Yeah.
Probably take 10,000, 20,000 per seminar, right, per person.
Correct.
Right, and there are hundreds and hundreds of people who attend that.
Yeah.
Absolute rubbish. So I'll tell you this case wherein there's this guy very active on Twitter, used to be now. So when there was no verification or anything of that sort, right?
Yeah.
Every day, 2 crores profit today, 5 crores profit. You know who I'm talking about too, I think. 5 crores
I think
profit
you can
today.
take the name, I think.
Okay.
PR Sundar, man. Like,
No, but there's this another guy called MD Nasir or someone. I don't know if, I think I must have, I'll
Yeah, I've
share
heard,
that as
yeah.
well. So this guy, Hyderabad, Mumbai, Pune, he has the seminars lined up in the next 2 months or something like that, right? Hundreds and hundreds of people go to that. And before that, right, he just start posting 1 crore today, 2 crores today. If you want to know, come to the seminar and we'll take advance and all of that.
Yeah.
Then a good thing which came up in the community, which is very good, there is this verified screenshot which came in. Verified screenshot or verified PNL.
Yeah.
Right? Which is basically your Zerodha account or wherever you're trading, you can kind of verify this is okay, this is
Yeah.
what I've made. After that, 40,000, loss of 30,000, 20,000, what crores, everything gone for a toss.
the basic logic is, if this guy is able to make crores from trading, why would he waste your time teaching you? He will only make
Exactly.
Yeah. This is actually the classic play from like the West. I think all these influencers, they started doing this in the West.
Yeah.
Like there's this guy called Grant Cardone. I don't know if you know him. Or there's Ty
Of
Lopez.
course, the real estate tycoon.
Ty Lopez and all of that.
Yeah.
It's all Rolls Royce, hired cars, or hired jets and all of that. And then, they'll pack up their shoot and go back to their place and all of that. None of it is real, and unfortunately a lot of people start believing it. It's super easy to own buy a Rolls Royce, super easy to buy a Porsche. It's just how it works.
But you know what you're saying about these seminars and larger than life sort of image?
Correct.
This just reminds me of these old school Ponzi schemes where they'd call people and be like, we can double your money and all of that. And
Lakshmi
that's
Chit Fund.
essentially they're using the same,
No,
the same
so
like
This is
roadmap.
modern Lakshmi Chit
No,
Fund.
this is modern.
वही तो है, वो
Exactly.
But a little more like on the whole SEBI thing. Like I
Yeah.
think the Madhvi Booch, she was like, something is cooking, she said, which
She
I could
did.
not understand what is
Yeah.
cooking exactly. But I don't know if you're a journalist, so you would know what exactly is cooking. I would want to know कि हो क्या रहा है यार इसपे, मतलब is for people like us who are honestly trying to make a difference or add value to people, right? Get them to do their SIPs, get them to do their index funds or whatever. And then there's these other guys. So how are we supposed to?
So for SEBI, there are 2 dilemmas.
Yeah.
One is that there is freedom of speech in India, right? It's protected by the Constitution
Correct.
of India.
Yeah.
Correct.
So a SEBI rule cannot violate the Constitution itself. The other is that a lot of the advertisers of influencers will be entities that are either unregulated, right? Who regulates Vault? Unregulated.
Correct.
Yeah.
Or it will be entities regulated by RBI or by IRDM, an insurance company, an NBFC. SEBI can't put any restrictions on them.
Right.
So, unfortunately, these things are something that probably the regulators all need to get together and tackle. But
Yeah.
even at SEBI's end, right, broker links, they regulate the brokers. What is stopping them from pulling these links?
The affiliate links, right?
Yeah,
Correct.
affiliate links,
Absolutely.
yeah.
Also,
That's not happening.
what most of these guys do is that they'll say they'll make a recommendation, they'll give the rationale, they'll make a whole pitch, and then at the end of the thing, they'll just say, this is not advice.
हाथ खड़े कर
They say, you're on your own, I'm not responsible for this.
For
And that one
educational
Is
statement
this the
absolves them of
new way of
everything.
saying mutual funds are subject to
Subject to market risk.
do it at your own risk.
Say it really fast.
Yeah, say it super fast.
No, but yeah, they do that, right? All of them, they'll. I mean, honestly, whatever crypto they want to, or maybe just a random share. I know there's this famous guy, right? Mr. Srivastava or something. Now he's
Akshat, yeah.
most of his stocks have gone down to the dogs, right? But
Yeah?
and now he's talking about how people get their commission and people should be into health.
He's still going political. He's like, why are we making monuments from tax money?
Yeah,
I was like,
Yeah.
boss, just stick
There
to
was hierarchy
influencing,
back
yeah,
then,
please.
all that.
He's talking about the IRR of the Statue of Unity. I was like,
Oh my God.
I was like, this is too much, yeah. 1.8% is the yield from the tax collection. I was like, which country does not have monuments? Yeah, just leave it alone. Just stick to your influencing. Yeah, please don't get political.
Well, it's not just individuals, but a lot of these companies as well. I mean, we saw all the IPL ads. One, they're extremely annoying. They're like the worst ads possible. But two, they make it sound like trading is so easy. Market sabka hai boss, right? Or earn a second income. Or, in the peak of the crypto days, that equating it to like FD returns and all, that should be heavily regulated. How can you make these statements and lure people into trading?
For our audience to know, what's the difference between a seasoned fund manager and his understanding of the market versus a common guy? Can you explain like the kind of difference there is?
Yeah,
Just for people to know that how less of a chance they stand, when it comes to beating the market or beating this.
Yeah. So let's talk about how hard it is to become a fund manager.
Yeah.
I would assume that even if you put all of the fund houses together, there are probably 100 of these individuals.
Yeah.
So even if you're an IIM grad, and IIMs collectively have probably some lakhs in intake.
Correct.
To make it to this profession, the chances are 0.01%. I mean, it's
Correct.
hard. You have to be really smart. So that's the human side of it. Then they have all the data in the world, the computing power in the world. These AMCs are capitalized. I think it takes 50 crores to set up a mutual fund. That's the cap.
Correct.
So clearly they're able to access the best technology, which you and I sitting at home can't.
Yeah, and don't forget the access to promoters and management of the companies directly.
Yeah.
The amount of information that they would have, we simply, no matter how much we try, we simply won't be able to match up to it. No.
Correct.
Yeah.
A lot of people ask me that, which stock should I buy, and I give them the most boring answer: buy a mutual fund, and they're not happy with it.
Yeah, they get upset. Some people get upset. If it's with their kya fayda tera? What are you?
I mean, that's what we do for a livelihood, but I think we get this the most, stocks or mutuals. But it's important for people to understand as well that whatever stock portfolio it is, right? It's impossible to calculate a return regarding that or whatever. Mutual funds have that the entire data. There's history. Everything is backed by data, which is not here. But then again, there are people out there who have millions of followers, and then they promote a stock, and it all goes down again.
And it's tax inefficient. I mean, you're getting dividends on stock which are fully
Yeah.
taxable.
Correct.
At your slab rate. All of that accrues to mutual funds, and you don't get taxed until you sell the fund.
Yeah, and all the trading, the short-term capital gains,
Correct.
long-term capital
Correct.
gains. I'm sure nobody is calculating the post-tax IRR. Post-tax IRR, maybe who knows if they're even beating an FT.
Correct.
In my opinion, I think a lot of people are not even beating an FT.
I would
Forget
agree.
post-tax,
Yeah.
but post-expense also. They don't even know what brokerage they're paying, what STT
Correct.
they're paying, things
Yeah.
like that.
Yeah.
But mutual fund mein expense ratio sabko dikhta hai, and that becomes then like a
And
talking
everybody
point.
wants to cry about the mutual fund.
Yeah.
Yeah.
I think we've spoken a lot about, in terms of, the bad things, but honestly, there's one good thing as well. It's got people into the market. Today, India, let's say our markets, right? They're they're independent in terms of global markets or US markets as it wasn't 10 years ago.
Yeah.
10 years ago, if something like this would have happened in US, right? Where the debt ceiling or whatever you say, the inflation problems, right? India, our markets would have been messed up right now.
Yeah.
We've been holding our own, and I think it's credit where it's due. It's because the number of people that have come in the last 3-4 years at
No,
least.
that's actually a really good point. I see a lot of people who have no idea what the markets are, but now they're talking about interest rates.
Yeah.
And
Correct.
like you said, the US debt ceiling and
Exactly.
all of that. And these guys, they don't read the paper, they're just watching videos.
Yeah.
And the fact that they know all of these things generally is a good thing, no?
Correct.
There are also a lot of now new age asset classes, right? Equity, debt, all that is, pretty much spoken
That's
about.
forgotten.
But stuff like luxury handbags, watches, P2P lending, things that are not in the traditional sense. So what's your view on things like that?
So we have to be really careful about them. We did a story on P2P lending.
Correct.
It's not clear what kind of NPAs they really have. So
Yeah.
the biggest platform today for P2P lending, which is Liqui Loans, they say that their net NPAs are 0, right? Take a second to think about that. 0 net NPAs.
That's
How does that, what is the math behind it? Essentially, they say that like if you think of the collabs that they have with BharatPay or Cred, right? It's either paying 9% or 12% to the investors, lending it out at 24%.
Correct.
So whatever losses they have, they're saying get absorbed in that difference.
That buffer.
But how long will that last? I mean, the
Yeah.
people who borrows at 20 and 24%.
Yeah. Lakshmi Jet Fund.
Well, I get a lot of questions about this because it looks so attractive, right? That in debt, and because it's debt, it has to be safe, which is obviously not the case. But that you're getting 9%, 12%, then why go into the risky equity? And I tell them that debt in this form is even more risky than equity because you could lose your entire principal, and you're lending to people borrowing at 20% plus. So obviously not the best credit rating, and it's completely unsecured. If I borrow from Cred or from BharatPay, and tomorrow I decide not to pay anything, they can't do anything about it.
Yeah, it's unsecured and nobody's guaranteeing it.
Exactly. Yeah.
Our funda with debt is very clear, honestly. Look, take whatever risk you want, even crypto for that matter. You want to take a risk, you take it there because you know for a fact what the outcome is, right? It can double your money or it can half your money, whatever, but you know it, right? With debt, what's going to happen for the 9 or 12%, maybe 2 or 3% alpha, what you're struggling for, right? Or what you're trying to achieve. If in case things go south, right? Your 100 will become 0. It's not going to be 90 or 88 minus
It's a
12.
binary,
It's just going to be 0.
Asymmetric.
So that risk reward is absolutely not worth it.
Yeah.
And that's why I think these P2P platforms, correct? It's a temporary thing because of the liquidity which is there in the market right now. There should be one. It's going to be a domino effect whenever it does.
No, and the other thing is right now their total AUM is a few thousand crores.
Correct.
So they can be selective to the extent that they are
Right.
about borrowers. But when it becomes 5,000, 10,000 crores, those default numbers are going to start creeping
Yeah.
up.
And I think their TA is also perfect. People who don't ask a lot of questions regarding. I'm not kidding. It's genuinely that.
Really?
Yeah, they offer loans to people who think that okay, fine. If I'm getting that much, that's fine. Worth it.
In India, generally, do you see other kinds of like Sayyam mentioned, luxury handbags, watches, and wines, that kind of thing? Do you see it coming up? Because I was actually reading recently, like a Rolex watch it's given a CAGR of like 20% in the last 5 years. It's beaten S&P 500, it's beaten the Nifty, it's beaten all kinds of markets, and I think these things are getting very popular. Which makes me think that people who are extremely wealthy, वो लोग अपने investments में तो कमाते ही हैं, फिर वो लोग जो use करते हैं उसमें भी कमाते हैं वो लोग. Their bags and watches and all of that. Do you feel like there's a market of that sort of emerging in India, like shoes? These alternative.
So I can speak about art.
No.
Because we did an article about IIM Ahmedabad launched an art index.
Okay.
They track the actual transacted prices of the top, I think 200 artists or so. I'll just double check this number.
In the world.
Yeah.
In India. Now,
In
this
India.
is an India specific art
Okay.
index. And the return has actually been, so they released the index, if I remember correctly, from 2002 till 2022, 20 years of data.
Yeah.
Now, the full period actually has outperformed the stock market.
Wow.
But, and there's a big caveat in
Yeah.
all this, most of that growth happened in 2002, 2007. After that, the stock market has done much better.
Much better.
Okay.
So happy to share a link of this article with our viewers. But it's very so there is potential for these things to come up. But as investors, you have to just be very careful. Do all the research.
Yeah.
I guess that's the important thing. Like with any other asset class, it's not the entire asset class. There are always pockets that will do well. Like with Rolex, it's a particular model that is appreciated that much. Not every single Rolex watch.
Yeah.
Right.
Yeah.
So again, you have to have that knack of identifying those trends.
Correct.
That will do well.
You actually have to be passionate about the thing that you have to understand the product is what I've understood. Because even if you want to buy, let's say, a Rolex, these companies, they don't want you to use it they want you to use it for end use, they don't want you to be selling it around.
Correct.
So it turns out if you want to buy, let's say, $100,000 watch, you actually have to be spending $200,000 before that,
Correct.
before you can even get access to that watch.
You're right.
So if you actually take all of that into account, it's not a very good investment at all, you know. But a lot of people do get fascinated by these sort of new
Plus
age
there's
asset
GST,
class.
no, on all these things.
GST is
Also, when there's
28%.
significant
28%,
company-specific risk also associated with these, right?
Yeah.
So, I think the example of Yeezy
yeah.
with Kanye, right? What
Correct.
happened right now? They just have a lot of stock pending, and
$1 billion I think they've written off.
exactly.
Yeah.
All these NFTs, what happened to that?
Yeah, that was.
It's all written off, I think.
Bathing ape NFTs and all of that.
Yeah.
Celebrities were promoting.
No, I just think it was some very smart guy with an insane money laundering idea, and it's all done. And
But
that's
you know,
it.
this is a lot of the art industry or like art pieces. It's a very big part of the money laundering industry because
I'm sure, yeah.
the value of this, I can say it's $10. You can say it's $10 million.
Yeah.
Yeah,
And
it
then
doesn't
if
matter.
you say it's 10 million, you can transport it for that much, and that's how you move the money. And
Yeah,
that's
yeah,
what
it's a
NFTs
great-
sort of were.
Yeah, it's a great mechanism for money laundering.
Yeah, but at least you were getting something, right? Even though money laundering, you're getting a painting with NFT.
You're getting a photo
You're
of
getting a
a monkey.
screenshot, right?
Have you invested in cryptos, NFTs, anything of this one?
I wish. At least in the boom
In
times.
the boom times, yeah.
And then I wish also sold at the
And
right
at the
time.
peak.
Ah.
Yeah.
Another topic we really wanted to speak to you about was like the evolution of regulation that's happening in India, right? One topic that is extremely debated right now is the whole RIA versus distributor model. And I think you're a big fan of the distributor model, if I'm not wrong. No, I'm just kidding. I'm just kidding. But the RIA versus distributor model. So what has your research shown over there? What are your thoughts regarding that? Because I think you've posted a lot of
Yeah.
very, very good
Yeah.
content
Thank
over
you.
there. Yeah. So
So let me explain to our viewers what RIAs are, because when I posted that, I got comments like, "What is RIA?"
yeah.
And that's because there are so few of them, right? On
Correct.
paper, just
1300?
Yeah, in the country.
And actually, what? 800,
800 or
900?
something.
883.
Correct.
So an RIA or a registered investment advisor is somebody who takes a fee instead of a commission. And this deals with the issue of conflict of interest, because if somebody's taking a commission, then there are chances, not everybody, there are some very good distributors in India, but there are chances that the person taking commission might recommend the high commission product, the high commission fund or the high commission insurance policy. So an RIA has a fiduciary duty to you, which means that they cannot base their choices on commissions. And which is why it's important that India has a large base of RIs who can provide affordable advice to a large section of people. Now there are those who replied in my comments saying that, oh, they're only for HNIs.
Correct.
Why do you want them to increase? For everybody else there are distributors, which is, I think, not good enough. In the long term, there has to be a way for distributors to transition to RIA status, and that has to be the future, I think.
Yeah.
So, in
I
fact,
think- yeah.
on those lines, when we made a call, right, to shift out of jobs and start BlueFort, we had a very big discussion and an important one, wherein should we do an RIA and should we go to this model?
Distributor model.
Because at the end of the day, again, of course, people know about it, but our intentions are always on the right place, kind of a thing, right? But when we are discussing, right, the way SEBI is after these RIAs,
Yeah.
in terms of compliance, in terms of the small nitty-gritties, as you rightly mentioned before, the advertisement code. I mean, you don't have to pay someone to have an internal communication, right?
Yeah.
Forget external. I agree, for external, that's advertisement, but within internal is also, so a lot of these things were on our minds, and that is why we chose that, if you're starting out, let's not burden ourselves with that compliance right now.
Yeah.
And we may choose to go to this model, and if later things get better, we will choose the RIA model.
Yeah.
Because I completely agree with your point. The alignment should be there, interest of the investor. Unfortunately, our system also works in such a manner
Yeah.
that even though the big houses, even though they are on the RIA side, right, what happens is they have their in-house products,
Yeah.
wherein there is always a hidden cost which the investor doesn't know.
Yeah.
Correct. So now so we are not manufacturers, correct, but there are manufacturers of certain products. Now, even though they might take a discount, they will give you a mutual fund under direct code and not take money from you or whatever, just charge you a
It will
nominal
be their
bid,
sister
right?
mutual fund. It will be one that they own.
Yeah.
Or
Maybe
like
that,
a PMS or some
yeah.
other
Or
product.
maybe they structure a portfolio where
Ah.
30% is mutual fund, 70% is in-house products, where they're earning, much more than what we can
Yeah.
talk about.
So the
right?
word is inbuilt, I think. What they will either try and stick like a structured product to you, where the costs are hidden. They're earning a massive amount from the client's money, and the
Yeah.
client doesn't know that. or like an AIF for that matter. AIFs of course are now coming into the purview of the whole SEBI trail model and all of that. But yeah, there's always, typically that's how it works. 30% will be like in mutual fund direct, where they say I'm not taking any money from you, and then there will be some hidden this. But all of this I feel is from our perspective. From the client's perspective, an RI is definitely better. But there are still a couple of disadvantages I can think of from the client's perspective. One is that if a person is taking a fee to give you financial advice, right, to justify that fee, would they have to do unnecessary activity in the portfolio? Something which may not be required to do, right? That constant changing, that purchasing, selling and all that, would that make the portfolio inefficient? Do you think that's one of the problems that RI, from the client's perspective, I want to understand, is RI 100% good, or are there some issues as well over there?
No, you raise a valid point. It is possible that some RIs, to justify their fees, might do excessive churn. So within RIs there are different models as well, right? So there are some stock RIs where they give portfolios of stocks,
Correct.
Baskets of stocks essentially, which is very different, and often you'll find they have thousands of customers of small ticket sizes. There are small case, then there are the more traditional RIs which provide comprehensive planning. It's more mutual fund, it's more creating a financial plan. In my experience, the latter category has the longer, more established there's been more alignment, I think, with customers. With stock RIs, because that relationship is limited to managing a portfolio of stocks, I'm not sure if it's providing the relationship that is comprehensive that SEBI had in mind.
Correct. And also the other thing I can think of is, again from the client's perspective, not from the wealth manager's perspective, is sometimes there's definitely an unwillingness to pay a fee, right? We still have that mental block which says that kyun dene ka kisi ko paisa, khali usne ye to bataya which stock to buy. My friends and family can say, or whatever like that, right? So sometimes people do need financial planners. Most people, I think, do need financial planners. But that one hurdle of having to actually pay a fee, right? That is the client's problem, I understand, but that hampers the client themselves. Right, so that way RI, a lot of people, they don't mind paying a distributor commission, because they think, because it's subconscious, they know it's happening. It's not that they don't know anymore. Everything is very transparent now, but they're okay with that. Somehow they're okay with that. As soon as it's a mental thing, it's a psychological. As soon as you have to cut a check or give some cash to somebody, that becomes a problem, and therefore they delay their financial planning advice. So these are two things which I can think of, strictly from the client's perspective, not from like the business front, which I believe are major hurdles, and how do we sort of get over these hurdles? I'm not quite sure yet.
I think just one point to add to that second point, it's not just the first time fees. People are like, I need to do the financial planning. They'll pay the fees the first time, and then even if their portfolio grows, they won't really be willing to increase the fees to the same extent as their portfolio is growing, right? So from that sense, the advisor is not incentivized in a linear way. There's no direct formula as such. So again, that in the long run, over a 10-year period I'm talking about, may work against the client and the advisor.
And I also want to offer you, Neil, some perspective of, like, let's say the West, or in fact you can offer us some perspective. You know more. Do you know how it's working in the US, in more developed countries? Are people completely towards the RA model, or is there still a lot of distribution happening?
I don't know, to be honest. I need to study that better.
So there's one thing that I do know, that this distinction of distributor and RI, and that one can't do the other, that's a very Indian thing. That's not the case in Singapore and in UK, US. Over there you can charge fees either way.
It's up to your discretion and your relationship with the client.
With each client you can have a different sort of arrangement.
No, I think that works much better, honestly. In the Indian context also, that should have been the case, because I think then the compliance bit and everything can fall into the right picture overall.
I guess overall it's about the person you work with at the end of the day. Whether they're structured as a distributor, they're structured as RIA, they're structured as whatever.
And today's regulations are so badly framed that even for distributors it's not great.
Correct.
Because technically under SEBI rules, distributors can give incidental advice. Right?
Exactly.
Correct.
Incidental to mutual funds. So distributors can talk about mutual funds, but technically they can't talk about other products.
Like or give a financial plan.
Create a
I can't recommend this mutual fund. I can just tell them that I have this mutual fund basically.
Correct. So,
Which is, I mean, I mean, that's such a big gray area, honestly.
and everybody violates it. Almost all distributors give, I mean, advice on other products and recommend.
And you can't do a good job if you don't, right?
Yeah, so it's strange. Yeah, definitely. I think what you said about like this distinction is not there in other markets. I think more freedom needs to be allowed so the client can. At the end of the day, the value needs to be added there for both parties, no? And you need to find the right person to work with. That's what matters.
Yeah, when people come to me, I say, don't be either of these. Be a Finfluencer. You can earn lots of money.
There are no regulations at all.
No
No regulations at all.
Bindas.
But you know, in terms of the evolution of regulations, I think 20 years ago, like 90s, early 2000s, it was like the Wild West. You could do whatever you wanted, Harshad Mehta time and all of that. People made a lot of money, right? But from there, SEBI has done a good job. A lot of regulations have come in place where India is now seen as a leader in terms of the regulations, right? In general. Are we now getting into an area of over-regulation?
I was just gonna say that because till March they did a good job. In March, with all the debt fund and your insurance product taxation, I
Till
think
March SEBI was our friend. Yeah. 1st April onwards.
so. Suddenly, you know, with us also, if you're, if we are just saying a financial plan, not making anything though, but with different products, right? And suddenly after March, we just don't have anything to give on the debt side or maybe, you know, on the insurance side that way.
Yeah. So that was FinMin actually, but
Correct.
The taxation part.
Correct.
But you're right. I mean, there is a TER circular. Now, TER circular, I think, is in the right direction.
That we agree.
Because there was this situation where, mutual fund houses were launching NFO after NFO because you can charge more money in smaller schemes. With this whole asset class wise taxation, expense ratio charging, that will probably go away. But when it comes to RIs, it has become just ridiculous. And to charge money to speak, I mean, freedom of speech in this country, 3,000 rupees.
Yeah.
It's 3,000 rupees
for her individual, and I think it's even more.
No, but it's per year or what is it?
Per approval for per advertisement.
Okay.
Maybe there's
per
a
approval.
Yeah, per approval.
No way.
Yeah, it's not per year. It's per advertisement. So there are people who are.
So your internal mails, if you're, sending something.
I think it's a monthly thing.
No. So the internal mails part, there is some confusion, and so the problem is there is a SEBI circular.
Okay.
Then BASL, which is a BSE owned entity, has been appointed as the self-regulatory body for RIs. So BSE has a certain interpretation of the SEBI circular. There was a call with RIs where initially the understanding was that even internal mails, you have to get approval, 3,000 rupees. Now what I'm hearing from RIs, and this is not yet on paper, is that no, internal communications is fine, having a basic website is fine.
Correct.
But that's still not good enough. You should be able to go out there and talk. Go out, come on social media, whatever. As long as you adhere to some guidelines, why should you pay somebody for it?
Yeah.
I think the way around it is point a camera at yourself and say you're shooting a YouTube video, then again regulations go out the window.
Yeah, point a camera saying educational purposes only.
No recommendations.
This is not financial advice, so do everything at your own risk.
Yeah. And then you're fine, then you're sorted.
Yeah.
But I think what Sayam said, moving towards the over-regulation zone now, that might happen in the coming, years. It's
Especially
already
the debt mutual funds. Yeah, the when we had the 20% indexation, and I think mutual funds were a huge secondary market for anywhere India's bond market lacks some depth. Right, we can all agree on that. Debt mutual funds are a huge player in secondary markets.
Yeah.
With this taxation completely, FD and debt mutual funds becoming completely at par in terms of taxation.
Correct.
I think that was a move which was not required. Is there any logic to it, Neil? Because we honestly haven't been able to figure out why they did this.
I think it's a result of lobbying.
Okay.
So,
Insurance companies.
I mean,
You don't want to say.
So it's about it's also, of course, that might be one of the cases, but also the fact that uniformity in taxation is one of their key goals as a government and as for the finance ministry also. In general, for let's say now insurance is being taxed, right, above 5 lakhs or something like that.
Yeah.
And your debt funds the indexation is gone, it's taxed at a slab.
Correct.
Now your FDs are the same thing. So now you want to invest in a debt product, you have all the options in front of you, taxation is the same, do whatever.
Right.
But where they went wrong, right, because in the last couple of years, the debt mutual funds were evolving very nicely.
Yeah.
Credit where it's due again, Radhika Gupta, right, of Edelweiss, she's come up with new products, the Bharat Bond ETF and all that. Brilliant products, yeah, and that's how I think we are moving in the right direction.
Yeah.
This just kills that innovation and kind of, puts you backward.
There's a lot of talk of Indian bonds being included in the MSCI
Global
debt
indexes,
index
yeah.
as well. And now I don't think that's going to happen anymore.
The liquidity reduces
Liquidity is gone.
drastically.
Yeah, but you were saying the reason, the lobbying part, I think that's...
Yeah, so I think
that's,
it was...
I want to hear...
Make it controversial.
Yeah, no, it's not about controversial. I want to know why it happened. Yeah. It's...
The stated reason is, or I think some people who generally seem to know what the government is thinking, said that it's because it's supposedly used by the rich, and so this levels the playing field. I think it's a result of lobbying, but we can never be sure. No, but what is interesting is it's created anomalies. Like today, if you buy a bond and you sell it after a year, you're taxed at 10%.
Exactly.
Right?
Yeah.
Correct.
If you do that, the same thing with the debt mutual fund, no, slab rate.
Correct.
Now look at overseas funds. They have come under the same debt fund taxation.
Correct.
Yeah.
But
I
if
think
you-
unintentionally.
If you buy a stock abroad and sell that, you still have the benefit of indexation.
Correct.
So
So it's too many rules to follow now for an individual that way.
yeah, I mean there are these weird loopholes. If you're going to be closing loopholes, close all the loopholes. I mean,
I think what's happened is that they're thinking or they're moving in the right direction, as you said, but they've probably been too heavy-handed and not thought about the on-ground impact or the impact on every single kind of product out
Correct.
there, and they've just gone ahead and did it.
yeah, I mean this came in the amendment to the finance bill on the last day.
Yeah.
28th or 29th?
It wasn't even discussed,
It was
and
a
because
shock, yeah.
they knew that if they brought it up for discussion, there'd be
When I got the
industry.
PDF, I thought it was a joke that some source is trying to
Exactly. I was shocked when I read it on Twitter only, and I was like, what is this? Yeah, I mean, debt funds are not being...
We had this debate internally that should we send this message out to clients, and we're like, "Nee, is this a rumor? Is this actually going to happen?
Yeah.
When should we send this out?"
But one thing that was good was making MLDs on par with this. No more 10% anymore. MLDs are now taxed at this. I think that was a loophole, big loophole that should
That
have
they
been
closed.
Yeah. Because the unnecessary, for the tax advantage, the mis-selling that was happening in MLDs was just massive. Right. So
Yeah.
that was a loophole that definitely needed to be closed.
So you know what? So one of the leading banks, right?
Just
They
say it, say the
sold
name.
a MLD to my client,
Huh.
and I told him that it is going to be taxed at your slab rate for
Yeah.
sure, without a doubt.
Yeah.
Right? He called him in front of me because he said, "नहीं, मेरे आरे में ना बोला है."
Yeah.
I said, "It's not possible." He called him in front of me.
Yeah.
अरे सर देख लेंगे तब तक तो कितनी चीज़ें चेंज हो जाएगी, ये होगा, आप रखो. And he was betting on the fact that we will only have to pay tax if the income tax or the
correct.
regulatory body catches us. We'll still file it on your regular 10%, 15%.
Yeah.
But if they catch us, then we'll have to pay full. I was like, wow.
What kind of thinking is this?
Wow.
Scrutiny आएगी तब देख लेंगे. That was the wealth manager's,
Yeah.
Unbelievable.
Yeah, Neil, one more thing we wanted to discuss was the whole buying a house versus renting a house debate. I've been getting these, I've been asked multiple times, is it a good idea to purchase a house? Especially, let's say for a young couple who is in their, early 30s, who just about made enough money to make a down payment and they're going to take a huge loan, in cities like Mumbai or Bangalore or Kolkata, etc., etc. What are the numbers behind this? Do you think it is a good idea to purchase a house?
Yeah. So I think a house to live in makes a lot of sense because it's more about less about finance and more about your life.
Right.
When it comes to investing, the return from a house comes from two sources. One is rental income and the other is the price appreciation. And then there are costs. On the other side, there are costs. So there's stamp duty when you buy a house. In Maharashtra, I think it's 6%.
Right.
Then there is maintenance, society maintenance, property tax, wear and tear. If something happens in the flat, you got to repair it. All of that. So if your net returns after taking away all of these costs is more than what you would get in an alternative investment, then yes, it makes sense to invest. Usually that doesn't happen because in a city like Bombay, rental income is 2%, even less sometimes.
Right.
So you're banking on price appreciation being massive. Like if you want to beat, let's say the long-term return of equity is 12%.
Correct.
You have to bet on a 10% CAGR of house price growth, and that is not happening. I mean, if you look at the RBI data, RBI has been tracking this since 2010. It is single digit. I mean, even Bombay is single digit. So
The price
Right.
appreciation.
the price appreciation.
Okay.
So in most cases, it doesn't make sense to invest in real estate. Now there will be pockets. There will be sometimes you see some development around you. You get a good deal, or you find an area which is just coming up and rental yields are higher. Sure, but that is only applicable to some people who have this, skill.
Yeah, and when you add financing to the mix or taking a loan to the mix,
Yeah.
I think then the it becomes a little more complex, right? Because like you said, rental appreciation is rental yield is 2%, right? And capital appreciation is single digits. So let's assume it's 5-6%.
Yeah.
Now when you're borrowing at the current times where the interest rates are 9.5%, right? My understanding is that you're not even breaking even. The price of the house has to grow at much quicker, maybe like a 10, 12, 13%
Yeah.
to be even close to beating equity at all or get anywhere close to it.
Yeah.
And not to mention the fact that at the end of the day it is an extremely illiquid asset, right?
Correct.
This
That's
is not
a
something
big deal. Yeah.
yeah, and it doesn't take you anywhere closer to your financial freedom. For somebody who is, let's say, who is a young couple, right, who wants to get to a mark where they want to be able to enjoy life, or they want to be able to have options, not necessarily chase money anymore. When they put that money into buying a house, my understanding says that over the next 15-20 years, in many ways you're stuck, right? You are not closer to your financial freedom as well. So it's not just about the returns that the alternative investment is getting you,
Yeah.
let's say a mutual fund or equity. It's also the form
Correct.
of that. The liquidity matters a lot.
That's very true.
I think the smaller nitty-gritties, right,
Yeah.
within real estate investing is something that investors ignore a lot. So let's say if I have to make a financial decision of buying a stock and maybe take a substantial exposure to that, or buying a real estate. When I'm talking about stock, I'll talk about brokerages, which is barely anything. I'll talk about some other demat charges, this, that, and negotiate there, right? But as you said, right, rightly, the pricing which comes with real estate, in terms of for you to get the real estate, stamp duty and all of that, is what people ignore a lot,
Yeah.
right, when they calculate their returns. Also, when it comes to real estate, right, as you mentioned, the location is extremely important. Now today in Bombay, right, I mean, you buy a 2 crore or 3 crore or 5 crore house, it's not going to appreciate as much as maybe you buy something outside of Navi Mumbai or somewhere on the outskirts.
Yeah.
Correct. It's again, what I was trying to compare is you buy 10 random stocks, you buy 10 random properties.
Yeah.
There is a higher chance the stocks will give you a better return than the 10 random properties.
Correct.
Right? Because so many things matter. And then rightly Siddhan pointed out the illiquidity aspect, right? That kind of shuts the entire deal down.
Yeah.
Overall.
And there are also legal risks, right?
Correct.
Titles are often unclear. Then there are tenants who will not leave, like they will do kabja. I mean, Bombay is full of cases like this. There are buildings that are crumbling in Bombay because the tenants are kind of locked into very low rents.
Correct.
Landlord has no incentive to improve
Mhm.
the building.
Correct. Yeah. But actually on the flip side, I've actually lately been appreciating liquidity. Always we take it as a positive thing. Right? Strictly
Right.
speaking, being liquid is very positive.
Right.
But I was thinking, a couple of clients of ours who are at the stage of bequeathing their assets, or at some point in time, transfer hone wala, right, to the
Correct.
next generation. Now, if it's super liquid and that generation has access to that money very quickly, then things can go wrong a lot quicker, right? If you give them, let's say, 10 crore mutual fund portfolio versus 10 crores of properties, at least the previous generation knows that the 10 crores of property will be somewhat protected. There's not much that they can do about it. But 10 crore mutual fund, they might blow it up on something. They might take a terrible call. They might take it out, start putting it in stocks. So this is something that I've started appreciating about properties or having real assets, which are, it's not only about returns is what I would say.
But I think on the flip side, again,
Yeah.
just flipping it again,
Yeah.
with the transmission bit which you mentioned right now,
Huh.
having a liquid portfolio at that time is much better thing rather than
No,
having
correct,
a liquid one.
correct,
It doesn't
correct,
matter
yeah.
if it's a bad stock or a bad mutual fund or a
Right,
good fund,
right.
Just having that money for you to use,
Yeah.
or to decide or to distribute.
Correct.
You see so many things happen, so many disputes happen with properties and all that, because
Yeah.
people, it's not easy to let go of it.
Yeah.
With mutual funds, it's okay, you have a portfolio, divide it into 2, divide it into 3 and finish this off.
Right.
So that's something, I mean,
Don't know,
I was
Yeah.
going to come to
consider.
that only. So
Yeah.
even if there are no disputes, it is much harder to transmit to inherit real estate.
Correct.
Yeah, agreed.
So for example, in case of property in what are called presidency towns, so Mumbai, Chennai, Kolkata,
Correct.
the will has to be probated if it involves
Yeah.
immovable property, if it involves
Right,
real estate,
right.
which means go to court, spend more time, spend more money. Whereas if it's only financial assets, then there's a nominee. Hopefully, there's a nominee.
Correct.
You transmit it to the nominee, and you don't even have to get a probate done.
It's pretty easy to be
Yeah,
honest.
yeah.
Yeah.
And if the will is not there, I understand then the process
Oh
gets
God, that's next level.
Yeah. You have to get a succession certificate, and that I think takes about 8 months, 1 year, in some cases. And then you add the dispute to the mix, it becomes
Correct.
extremely complicated. So
Correct.
definitely that way property can be quite quite a problem.
One more thing that Neil wanted to talk about, which is being talked about so widely, is AI, right? And how that will impact every industry. So I just wanted to touch a bit upon how it will impact us, wealth managers in investing, as well as how will it impact journalism. So firstly, on investing and wealth management, how do you think AI will take shape?
Yeah, so I actually tried it out. I asked Bard which stock should I invest in, and this is in the initial days that Google Bard was launched.
Correct.
So it gave me recommendations. I asked it what is the target price for RIL. It gave me a recommendation. Then I did a story on this. AI is
With a rationale or without a rationale? Just a recommendation.
no
Number.
with four bullet points. That was the
Understood.
rationale. As long as AI is properly molded and these guardrails are put into place, then it has a lot of productive uses. It can make all of the whole industry very productive. Right? Imagine having to digest an annual report of 50 pages
In seconds.
Yeah.
I think with any kind of technology, right, this is very essential what he said in terms of molding it properly, using it the correct manner, and whatever if you slightly even misuse it, can be disastrous, right? So for us also, let's say wealth managers, huge presentations and most of the data crunching or whatever you have to do, the reviews which we spend weeks on, could be done within probably second or a day.
Correct.
Right? So that's a massive advantage.
Yeah.
In fact, for investors as well, right? If it will be very difficult to missell a product because it's very easy to get those expense ratios. It's very easy right now. The problem why investors don't put so much efforts to understand when someone is misselling is because you have to separately write everything on Google. You have to understand the key terms and everything. Now with a AI kind of a thing helping you out, right? It just increases your reach into as an investor and kind of understand who you're working with, whether they're actually doing the right thing or not.
Yeah. So let me address the journalism part of that question. Everybody thinks it's a no-brainer that why can't you just put AI to write articles, or why can't you just and in some ways media is already using AI. So for example, photos, right? Photo captions that go with articles. AI can just, because what is photo captioning, right? You put a search and let's say the article is about Prime Minister Modi. You put a search and it'll fetch you something from database. You add that to the article. It can have some hilarious results. So when the news on PR Sundar came out, one of the big newspapers put Sundar Pichai's photo there.
Yeah, I know this, correct.
And that, so stuff like that will keep happening.
Correct. Yeah. So a lot of bugs to sort of still iron out, right? There's still a long way to go. But I think in terms of like data crunching and all that, we don't have a chance. Like there's no human which can sort of outcompete an AI. It's definitely not possible.
And I would welcome it, to be honest.
Correct.
We need that support.
Yeah. Where I think it makes it the arguing point over here is the behavioral aspect of it, because at least my opinion is that what wealth managers are doing, 80% of a job is really just sort of calming the investors down when necessary, or getting them to do the right thing. The behavioral part is very important. What I don't know is when AI will get to a point where it starts controlling the behavior of investments at all, it starts commanding. I think it's a matter of trust. If en masse an entire population starts trusting a particular tool, or starts trusting AI to say that this can make better decisions for me, then that at that point in time, maybe wealth managers or lawyers or a lot of other professions may start getting sort of
Disintermediated.
Correct. Yeah. They may start becoming a little bit irrelevant here. So this I think that's definitely gonna happen down the line.
I agree. I think that is the risk, that when people or investors or users start seeing AI as humans. I mean, we've all seen the movies, right? We've seen people falling in love with their digital assistant, stuff like that. So if it gets to that level where it feels like you're talking to a human, so that an actual human doesn't have to call you and tell you to send the documents or open an account or whatever, and they get comfortable enough with that, then I think then a lot of jobs are at risk.
Yeah, because right now the way I see it, if my job is to tell an investor to stick to his or her her SIP, not EMI, hopefully, SIP for the next 10 years, 15 years, then when the market drops, what I do is I try to pacify them, saying that, okay, this happens, this is a normal part of the market, and all you have to do is keep going, trust me, look, my own money is over there. When AI starts doing that stuff, which is really missing right now, then I think it becomes, I don't see why I might be necessary in that case.
Yeah, and I think the few humans who do remain will get a lot bigger premium. Like,
correct.
You can get a bread, like a industrial bread, or you can get an artisan bread. Right?
Correct, yeah.
And obviously, artisan bread
commands a
priced,
premium.
Yeah.
But when I talk about journalism, right, to you, AI, I mean, most of journalism, right, some part of it is fact checking. I think AI could be a great tool for journalists as well to do that, because especially in a country like us, right?
Yeah.
What do you think? What do you think about it?
Yeah, imagine what will happen to influencers.
I read an article that BuzzFeed has laid off a lot of their writers.
Stuff, yeah.
I mean, their content is, very clickbaity and very sort of in a particular format anyway. So I guess for them it works. But how do you see journalism? How has it evolved in the past, and how do you think it will keep evolving going forward?
So journalism in the past several years has gone through a kind of crisis.
Yeah.
Because so much of that money now goes to the tech giants, right? It goes to Google. When you read news in Google, it's not the end newspaper that's getting much money. Most of it is going to Google. And with people on social media playing the role of journalists, there's a huge impact on the industry, and it's bad for everyone, because then the truth gets lost. Whatever is just purveyed on social media becomes reality. So what I hope is that the profession, the industry can find a way of getting around this and staying relevant. I don't know how, but I hope it does.
Speaking of like the evolution of journalism, I'm sure you get to do a lot of investigations, being a part of Mint and all of that. Can you tell us some nice spicy stories of your interactions with entrepreneurs, fund managers, some investigative journalism you must have done, the kind of stuff that a lot of maybe anecdotes, I don't know, a lot of stuff that people would not necessarily know what's happening behind the scenes.
So in personal finance, our outlook is more to help investors either make more money or spend less money. So the influencer piece was an investigative piece.
Correct, yeah.
But the kind of stories that I like more are the ones where, for example, we will talk to a family and ask how they invest their money. We profile them, or we talk to a fund manager and ask him or her how
they invest.
Yeah, like there was a family where like 3 generations of people were there in that article who spoke to us, and it was grandmother, son, and grandson, and we asked their asset allocation. It was the grandmother who had the most in equity because she wanted to pass on a legacy to her.
Oh, interesting.
And also often in retirement your expenses actually come down, so for her it made a lot of sense. So things like that you sometimes realize which are not obvious.
What I was trying to get to was basically recently we had a huge front running case in one of the major AMCs over there, and so there seems to be some sort of, I'm sure they can't be an outlier, there seems to be some sort of unethical activity happening in AMCs, and this is investors are concerned about this, right, to some degree, especially the previous generation who's actually seen the whole Harshad Mehta time and all of that. They simply, even till date, after we've had all our Morningstar research reports saying India is one of the most highly regulated industries, and they simply still don't trust mutual funds, and these last sort of case, every now and then some cases come up which
So I'll tell you another article that we did which was of something that everybody kind of knew but had to be documented. So there are banks, and then there are mutual funds owned by banks.
Correct.
And it is kind of known that bank RMs will recommend schemes of their own sister mutual fund. Although they are supposed to be unbiased, all distributors are supposed to be unbiased.
Correct.
what we did is, thankfully all this is disclosed. Like there are disclosures, filings where all of this data is out there. So we took out the percentage, that what percentage of that sister AMC's money is coming from the allied bank, and what percentage of the bank's commissions are coming from the sister AMC.
Right.
And they are massive, in some cases more than 90%.
90%.
I remember that piece. It was
Yeah.
very interesting and surprising. I mean, we all, as you said, we all knew this was happening, but we didn't know the extent.
The
Yeah.
numbers,
Yes,
yeah.
yeah.
90% is a lot, yeah. I mean, for somebody who's supposed to be unbiased. I mean, we've seen portfolios where the bank and the distributor and the manufacturer are very closely sort of linked, and we have seen all the thematic
fund,
funds from the
exactly,
same mutual fund, all the thematic funds, Make in India fund, infrastructure fund, the pharma fund, all of
Yeah.
that from the same AMC, all of the flexi cap funds, mid cap funds, everything, is from the, and then एक नाम के लिए एक दूसरे AMC का नाम, डाल देते हैं.
Just another, yeah.
Yeah, just for the sake of it. So the investor, maybe, I don't know, is not so suspicious.
Yeah. No, I've heard this from AMC guys also. The first question that bank RMs ask them is that kitna milega? What is the commission you're giving?
Correct.
They don't much care about returns, investment strategy, none of that.
I think this was established way back, yeah. In general, also, even if they don't sell the sister AMCs, of course they do, but in general, their entire structure or the way they kind of sell is about commissions itself. Yeah, whatever it is, their decisions, everything is based on commissions.
And we've spoken about mutual funds, and like that's what's probably available in the filings, but also their own AIFs, where the upfront commissions are there.
Insurance.
Exactly.
Insurance is substantial.
That video that went viral of this HDFC bank.
Oh
Yeah,
my
they fired that guy, no?
He was a regional head or something. Some
Yeah,
vice
yeah.
I think
president.
Kolkata.
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 I mean, he was.
He blasted that guy. I felt so bad about that. He was shouting at the top of his voice where 8 people were on the screen, maybe more on the back end, right?
But in bank, this is such a common occurrence.
This is the first time I've seen someone shouting. Like
Unfortunately,
literally.
it got documented,
Yeah.
but otherwise in
Yeah.
banks, this is very, very common.
Banks
This-
is
they
basically
treat-
just a
it's-
pressure cooker scenario
yeah.
where
They treat it like
everyone is
dogs,
just-
The
No, and in
private
the media,
bankers.
in the media, it became an HR story that oh my god, this is not how employees should be treated.
Yeah.
But look at the insurance story. I mean, look at the incentives that are there in the system.
Exactly.
Correct.
Right?
Yeah,
That-
And I think somehow this comes from the management to a certain extent in terms of pushing it. I think we recently saw a video
Yeah.
of a prominent NBFC, right, where they're talking about the telecalling and all that, and he was questioned
Yeah.
about the tele, and very arrogantly, right, arrogantly, he's like, if then don't come back to us. If you don't want us to call you, don't come back to us for a loan. It's not like I get a call from them at least 5 times a day. It's not like I need a loan anytime soon, hopefully not.
Yeah.
And it's not like, even if it's my data, right, I should choose to get that loan or no.
Correct.
So the thing is, of course, not only that, but within that entire circle of top management, right, the arrogance comes from within.
Correct.
Wherein it's pushed down that sell, no matter what, call them, shout at them, do whatever you have to, but get this policy sold or that loan sold, kind of a thing.
Yeah.
The culture always comes from the top, right? If an RM is being particularly pushy to you, trying to sell you an FD or insurance or something, it's not because that's his personality, it's because he's being made to do it.
Exactly, right? Absolutely.
I've had interactions with clients where I don't know, this should be a little more obvious, but it's not, like some clients, it's like, who are you working with? I'm working with, let's say, ICICI. Okay, now, if you see their portfolio, they have like 9 funds of ICICI.
ESG,
and I'm like,
multi-asset.
Apko, can you connect the dots here? Can you just sort of see what's happening? And then unko 2 minute baad chamakta ki हाँ कुछ तो गलत हुआ है मेरे साथ. I'm like, how is it not more obvious that this is happening here?
Correct.
Because they just do it all out of relationship. They're just like the RMs try to be so sweet to you and like play on that side.
Yeah.
I've had one RM, a bank RM, tell me that you should invest in this, and I said ki nahi, it's of no use to me, and I'm a wealth manager, so I manage my own money anyway. And then she was like, sir, please kar do na, mere liye help ho jayega. That was her pitch.
It's true.
No, the most common call is ki quarter ending mein please keep a
हाँ,
balance because help ho jayega.
Yeah.
Exactly, I was coming to that only. So there's this
You have a
client
good
in Pune
story.
itself,
Yeah.
right? And she's a 70-year-old lady, husband passed away last year. So we did the entire transmission case and all. And after the transmission, we redeemed those particular funds and wanted to reinvest them, right? This is March 19th we are talking about. Fortunately, during that reinvestment, we did it physically and not online. So I was with the lady, right? And she's like, I'll just ask my bank what the balance is and all that so that the checks pass. She was very scared about it, fairly, right? She called the banker, the lady picked up, and she's like, मैम अभी नहीं, आप 1 अप्रैल के बाद ही इन्वेस्टमेंट कर सकते हैं. And I was like, and she's like, अच्छा, okay, तो मैं बोलती हूँ 1 अप्रैल के बाद करें. And I was like, what? Where did that come from? So, fortunately, as I said, I was there. I spoke to that female, and I was like, मैम 1 अप्रैल के बाद क्यों कर सकते हो? तो आप कौन बोल रहे हैं? तो मैंने बोला, मैं इनके एडवाइजर हूँ, लाइक यू नो, इनके साथ हूँ, रिलेशन में हूँ. तो he's like, नहीं वैसे इन्वेस्टमेंट कर सकते हैं, बट
हमको बैलेंस
आप देखो ना, थोड़ा हो सकता है तो 1 अप्रैल के बाद ही दीजिए, अभी 10 दिन ही बचे. लाइक जस्ट कट द कॉल. और आई टोल्ड देम, लाइक माय क्लाइंट, राइट, जस्ट डोंट कॉल हर एवर अगेन. या
वन ऑफ माय क्लाइंट्स, वेरी वेल्दी फैमिली, दे आर डूइंग, उन लोग को मार्च में जब भी द इंश्योरेंस पॉलिसीज गॉट टैक्सेबल, 2 crore पर एनम प्रीमियम चिपकाया. 2 crore. तो मैंने उनसे बोला कि 2 करोड़ का आपने लिया, why did you buy so much? Like, no, the bank gives me a locker and all. Yeah, so you know, it's like, I was like, my jaw dropped. I was like, I didn't know what to say. I was like, oh my god, a locker, literally, if you did a 10 lakh FD with them, वो locker मिल जाता आपको. यार आपने क्या किया?
But this shouldn't be the case. The locker should be given irrespective. That's the thing.
But we all know how it works. Yeah.
No, but it is, unfortunately, that's the reality. This is how things work.
Yeah. So that's that on AI. I think now let's get to your book. Yeah, I think it's extremely well received, and we've been seeing so many posts, and
Massive,
congratulations.
Massive congratulations
on being the first to write a story about Rakesh Jhunjhunwala.
Show it,
we
no?
have it right here. We'll get it signed later, but
yeah, we should.
Yeah. So I think we just wanted to discuss the book a little bit. First, can you talk us through your entire research process, and you know how you got all the information you did get on him, and any interesting sort of, again, stories or things you have to say about Mr. Rakesh Jhunjhunwala?
Also, what inspired you to write this and on him?
Yeah, so I'll answer that question first.
Yeah.
2 reasons. So the deeper reason is that he epitomizes the Indian dream, the Indian investor's dream. How somebody can start with 5,000 rupees, end up with 35,000 crores plus. I mean, that's just the disclosed portfolio. The more practical reason is that he passed away last year, and there was a lot of interest in him. Suddenly there was a surge. So we felt this was the right time to write the book. Now, how did we research it? So there was a dual dilemma. On the one hand, there is so much information about him out there. He's given so many interviews, videos, articles, everything. So we had to digest all of that and make sense of it. A lot of people say that, oh, you guys have used publicly available information. But dude, if you want to do the same thing yourself, it will take months. It'll take months. So we process all of that, and then we talk to people around him, people who had worked with him. Now there was a lot of resistance, the family, because they had just seen somebody pass away who was really close to them. So they were not in the mood to talk. And some of his close associates who didn't want to talk on the record. We did talk to people who he had worked with off record, and some investors who have very prominently known him. So Shankar Sharma, for example, or Ramesh Damani. We talked to both of them. So that's how. So the book has 3 parts. The first part is biographical. The second part is about 3 stocks that made him money and 3 stocks that caused him to lose the most amount of money.
Right.
And the third part is personal finance lessons that you can draw from him. So the 3 of us, the 3 authors, we split it amongst ourselves.
Yeah.
So Aditya, who's a wealth manager, did the stock analysis, and I and Aprajita, who are journalists, we did the biography and the personal finance lessons.
Yeah. So can we get a little summary of the personal finance lessons that we could have, that all of us can learn from him?
Correct. So he had a tremendous faith in India's economy and our stock market.
Yeah.
And at a time when there was no reason to be that bullish. I mean, he was around in 2008. He was around in 2013 when market was not going anywhere. And even at those times, he maintained that bullish stance. He maintained his holdings. So that's one. This sunny optimism. I mean, as a person, I'm pretty pessimistic. So I can't put 90% of my portfolio in stocks.
Yeah.
The other is patience. So he began his career in the late 80s, early 90s. And the initial 10 or so years, he was a trader. Right? He built his capital through trading.
Correct.
But something happened around 2002. He even wrote an article in ET saying the time to invest in India is now. And that's when he bought some of his big stocks. So Titan, CRISIL, Lupin. and held them for the next 20 years, watched them compound like crazy. So that speaks of enormous patience.
Yeah.
And even there is more patience than we think. So the anecdote is that he bought Titan in 2002 when it was at its bottom, and clearly he bought a big chunk of it. But there's an interview that a Titan executive gave which talked about him buying it in the 90s, early 90s. So he was a lot more patient than we think, even with Titan. So that's the second thing that all of us as investors should take from him. What we shouldn't take is clearly the leverage bets and the trading that works for tiny minority of people. Most of us, 9 out of 10, lose.
Maybe it works at that level when you have that kind of information around you.
Possibly, yes.
Your point on his unmatched optimism, it's insane how bullish he was. I remember, so back in Edelweiss, when I was a research analyst, I don't remember exactly which company, but one of his famous companies, either Titan or VIP, on a quarterly con call with analysts, they were moderating expectations that next quarter or whatever may not be that good because of these reasons. And he was telling the management of that company that you guys are being too negative, that your company will do better than what you are saying.
Yeah.
Wow.
And you guys should be more optimistic. He was telling the management of that company. And that takes like serious level of optimism that you're saying the guy's running the company that you're not bullish enough.
Correct.
Yeah, that's very interesting.
One thing, I mean, of course, it's not related to the book or whatever, but you know how the guy is when he's sitting with the Prime Minister, and did you see that photo?
Yeah.
His
His
shirt
shirt,
was, oh my God, that's
Yeah.
when you know
Yeah.
that, okay, this guy has something in him, right?
You remember what he said? He said that istri karke to aaya tha, abhi
नहीं हुआ तो क्या करेंगे?
क्या करेंगे?
No, that shows you how, I mean, that level of confidence, that level of, I mean, if I was to meet a Prime Minister, if I can someday, right, it's going to be like all tucked up, properly suited up, everything, but nothing.
You'll carry an iron with you. If
Exactly.
it wrinkles, you'll iron it again.
But that shows so much about the man, in general, about his confidence.
Did you get a little bit insight? Did you get a little insight into his personal life, like how he thinks and his family and that kind of thing?
Yeah. So my colleague Aprajita, she wrote about that,
Okay.
including his health, and broadly what I can say is that is probably the one area where he, as a person, should have worked harder. I mean,
Right.
he was known to go to this bar, Jeffrey's, where
Right.
he would drink, and although he was not the biggest tipper there, surprisingly.
It was all
That's how you make
illiquid,
money, right?
Yeah.
So he would go there every day and just
After the
which
market
is-
closed.
Yeah.
And,
After the market closed, 3:30 बजे.
नहीं
शाम-
मतलब
अच्छा,
शाम को
शाम को. I was
Bombay, yeah, time like that.
नहीं इतनी जल्दी कौन करता we incidentally went there. It still gives you those vibes of Rakesh.
Yeah. So I
Achha.
guess I mean it's the important point. Health का भी ध्यान रखना जरूरी है. So a little bit of Rakesh Jhunjhunwala, little Nitin Kamath.
Yeah.
Combination
Influencers
of
का सुनो थोड़ा.
Yeah, थोड़ा.
Let's not go there. We are still doing good job with the wealth part. So Neil, you've been asking, we've read your post where you ask a lot of people about how they invest or how they go about their
Yes.
asset allocation, or in general about their some questions about their personal life, right?
Yeah.
So I want to know, how has Neil Borate been investing in the last 3 years?
Yeah. In fact, let me talk a little bit before that also,
Okay.
because I have been a terrible investor. Like, there was a time when I did F&O and I lost money in it.
Oh my God.
Who hasn't?
I think that's a rite of passage. You have to go through that.
Yeah. So in the last 3 years, I've actually been a good boy. I have invested most of my money in mutual funds, that too mostly in a mutual fund, Parag Parekh. I've said so in the past and I will say it now as well. Because their philosophy really, really chimes with me. And the returns have been great. There will come a time, I think, when passive will make a lot more sense and I might shift to passive. But for now, the only active exception to my usual belief that passive indexes will outperform is this fund house. I also invest in NPS, and I think there's a lot
Right.
of
Correct.
power and hidden benefits to NPS which nobody realizes, especially the government. So what am I talking about? Essentially, there is no upper limit to how much you can put into the NPS.
Correct.
And when that money grows every year, it is not taxed. It is not taxed until the point of withdrawal. So you
Right.
can spend your youth building up as large retirement corpus as you can possibly manage. And anyway, when you retire, 60% of it is tax free.
Correct.
The remaining 40% you have to annuitize. Matlab, if you have a
Yes.
1 crore corpus,
Yes.
40 lakhs annuity does not come to you in one go, and then you don't end up paying like 10-15 lakhs tax
Yeah.
on it.
Yeah.
That 40 becomes, let's say, per year you get, let's say, 3 lakh income,
Correct.
right?
Mm.
Anyway, that income is going to be so small that you might not be in the highest tax bracket. The
Right.
rest of your 60%
Correct.
is a tax-free withdrawal.
Yeah. Yeah.
And now they're adding SWP, an SWP-like feature to NPS.
Okay.
So just
Oh,
imagine,
that'd be great.
Even more
so,
tax efficient.
so just imagine you can supplement that 3 lakh taxable income with another 3 lakh tax-free income. So
Mm.
there's a lot of power in NPS, and the
Yeah.
costs are also so low.
Yeah.
Correct. So mutual funds, NPS. Anything else?
What is your asset allocation right now?
So that comes from the flaw in my personality, which is this inherent pessimism.
Pessimism.
So I think it's roughly 50% in equity,
Okay.
around 30% in debt,
Mm.
and 20% gold. Gold actually, that pessimism helps with gold, because
Yeah.
whenever I see gold dipping, I'm like, yes, let's go buy it, because the government is always going to print more money and its price is going to go up.
Correct.
So I've had a good history. It's the one asset that has generally worked for me.
Correct.
But my under allocation to equity has not, unfortunately.
Now that you've written a book on Rakesh, I think your optimism will.
It's
It's
gonna
like-
change.
Yeah, we're gonna
That-
see
I'll dial it up.
asset allocation 55-45 soon, something like that.
Maybe.
Yeah, and how many years would you say you're away from your intended financial freedom mark? Have you thought
On those
along
lines?
those lines, where this is a number I want to achieve, and once I get to that number, I think mentally I will be a lot more. It'll be, life will be more peaceful, that kind of thing.
I think I should probably hit it in another 10 years or so. Touch
Okay.
wood.
Right.
If HT Media, if you're listening, please increase my salary. But no, the way I think, I will want to work for as long as I can.
Yeah.
A lot of people retire too early, and then they can't figure out what to do with their lives, and then they kind of end up pursuing something which is not so much fun, or the boredom just does things to them.
Right.
What would you do once you hit financial freedom? You don't need to work for money anymore. What do you see yourself doing then?
So I love my job. I think I write. Nobody becomes journalist to earn money. Like,
Yeah.
that is flat.
That's it.
There's only one reason why anybody should become a journalist, and that is because they like to tell a story.
Mm.
So long as I can research stories and tell them, that's it.
You plan on writing more books?
I am actually working on one. I'll say more about it once.
It's called BlueFort Financial, the way forward.
Okay, Neil, I think we had a really good chat today. Thank you so much for
Likewise.
coming on, on the show, and I think we had a lot
My
of
pleasure.
fun.
My
pleasure.
Yeah, that
Where is
it's-
the coffee hamper?
the coffee hamper will be here soon. Yeah. Once you change your asset allocation, we'll give you the coffee hamper. A little more optimism then. Yeah. So one last request before we leave. If you could just sign this book for us, and that would be very helpful.
Thank you so much.
I think he's complaining about everything. We went wrong in the
Yeah.
podcast.
Help me. Thank you so much, Neil. For everyone who's watching, I'm sure
Can you read it out
a
though?
lot of.
Can you read it out?
I think
No criticism doesn't non.
Yeah, for everyone who's watching, I think there's a lot of information that you can learn after this book. So thanks a lot, Neil.
My
Thank you
pleasure.
for
Thank
coming.
you
for
Thank
having
you.
me.
Yeah.
Thank you.